first of all, what do you do with a lot of these currencies? So the currencies, even if you look at what happened to Euro, Swiss, I mean, they're really on the move. But then you have to ask yourselves, okay, ruble, should we just forget about it? And then some of the currency that are very commodity rich.
Well, I think for the ruble, yeah, I think forget about it. I don't think the price on the screen really is a reality of the price. But, you know, some patterns have been emerging, and those patterns, certainly in the G10, have been really put on the head this morning. So the patterns that had been emerging really over the last couple of weeks had been, you know, the bottom of the G10 table was stocky, performing badly along with those Eastern European currencies, of course, euro quite near the bottom of the table, and at the top were those commodity currencies, the Aussie, for instance, the New Zealand dollar, the Canada, the dollar, and the yen and the Swiss franc, sterling, you know, somewhere sandwiched in the middle. But of course, if we look at the performance table today, what do we see? We see the stocky coming back, we see the NOK coming back, and so some of those European currencies, given this reprieve by this news, that of course the Europeans could be coming together and they could potentially issue debt.
Yeah, I mean, the concern is that, of course, maybe they don't, right? This is a report that they're talking about. It's on the table. We've never seen something like this on the table. But what if someone says, no, because actually it's too much fiscal spending and it's just not the right time? Then do we have just a lot more volatility in currencies?
I think we do. I mean, you know, that news stories, I think, evoke memories of the recovery funds. It's something that came in after the start of the pandemic, you know, when the fiscal authorities in Europe were coming together. There was suddenly some sort of glue in those fiscal authorities that had always been lacked, you know, since the start of the euro back in 1999. And that really formed this idea that maybe the euro could, after all, you know, be some sort of safe haven, because if they were issuing debt, there was somewhere for safe haven buyers to go.
Yeah, but if 40% of your energy is from Russia, I mean, I don't know what fiscal spending, even if you throw everything, kitchen sink at fiscal spending, like what can it actually do?
You know, I would agree with that, and I think today's reaction that's been turned on its head is perhaps short term. We need something more solid before we can go further. And I think the reality is that Europe's energy security there's a massive question mark. There's a massive fog, therefore, over the economic outlook for the Eurozone. Will it go into recession? You know, can it avoid recession? That sort of fog, and therefore the fog over the ECB policy, means that there's that big cloud of uncertainty over European currencies, and that will remain until we get more concrete news.
Yeah, and Jane, I don't want to pour water on this because you know, the fact that the EU is even considering this massive joint bond sale to fund, you know, energy and defense is huge. But again, does it actually, you know, help with stagflation, or is this something that we just need to get used to?
Stagflation is here anyway. I think we know that. We know that we have the risk of higher prices. Yeah. It's very difficult now to see Eurozone inflation, you know, below that 5% level, you know, on an average, say, for the rest of this year. We know that we're going to have slower growth. We know that higher energy prices takes money out of consumers' pockets, and therefore there's going to be less demand and everything else. So that we know that we have those two things. We know that we're going to have higher inflation and lower growth. However, if the European authorities can do more on the fiscal front, if they can show more of a united front, if they can show that sort of cohesion that's always been lacking, that economists were worried about back in the 1990s at the start of EMU, that is a massive step forward for the euro, and it does alter structurally the outlook. So this is really big news, but of course we need more details before we can, you know, really be confident about this. So it is a big step forward, but for the time being, certainly over the weeks ahead, most of those clouds over the euro and European currencies are still there.
Jane, my fear from the very beginning was that there was a second, you know, round effect on something, and I kept on being told, no, it's okay, we can freeze out Russia without really anything happening. Now there's, you know, nickel is a huge concern, and a Chinese bank is embroiled. But what's liquidity like in currency markets?
Well, you know, I think it depends which currencies that you're looking at. I mean, certainly, as I said, we can forget about the Russian ruble. People can't really trade with their Russian counterparts at all, so therefore the liquidity is gone. I think if we look more in the staples, if we look at euro dollar, I don't think liquidity is a problem at all. So clearly it depends where you're looking. I'm not sure about the Eastern Europeans, but I would imagine that there's probably less liquidity there than perhaps normal. And certainly if we look at what happened in nickel yesterday, liquidity was a huge example of what happens when liquidity dries up. So we know that it is a problem. I think you're right to be worried about second order effects. I think, you know, we've got nickel that will affect potentially the manufacture of EVs and other batteries. But I think before that, we've got to consider food production, and I think that's been a concern over the last couple of weeks. And I think really for people in North Africa, for instance, who had been reliant on wheat from the Black Sea area, this is a massive concern, and something which will perhaps almost certainly affect Europe, perhaps with another wave of refugees.